Hey everyone, this episode is brought to you by River, the place that I personally go to securely invest in Bitcoin with confidence and with zero fees.
Everything in Bitcoin serves at the pleasure of store of value. Store of value is king. Everything else is there for store of value. Do you get a lot of other features? Absolutely. I mean, like, it's endless. And we haven't even scratched the surface of all the stuff we can do.
So here's the deal, man. Like on Twitter, online, there's so much jargon. There's so much terminology jargon being thrown around. And I think for people that are just showing up, people that have been here for a while, myself included, are looking at all this jargon and saying, good Lord, it's hard to keep it all straight. And I think more important, you don't know how to prioritize whether this new jargon you're hearing about is something that warrants your time and effort to understand and de-risk in your own mind, whether it's something you should be thinking about or not. And that's the intent of this discussion, is to bring on, in my opinion, one of the most technically sound people in Bitcoin with respect to software, hardware, creator of Cold Card. I'm sure most people know what Cold Card is. The block clock, all this awesome stuff. So that's what I'm trying to accomplish here. And I didn't even tell you what I was when I asked you to come on the show. So surprise, this is what we're talking about.
Surprise. But it's dice entropy.
So I want you to think about, from your point of view, NVK, what is the top 3 things that you think are important technical conversations based on where we're at right now? And I want you, as you're thinking about that, I want to set this environmental backdrop up for people. We've got a mempool. For a very long period of time, this mempool might have had 5 to 10 blocks in there at any given amount of time, maybe like only one block that was being worked on, low fees. And then since I would say September, October, we have seen the mempool, which is all the transactions that are waiting to make their way into a block, has blown out. I think we're over 500 blocks in the mempool waiting to make it into a block. Fees are pretty high. That's our backdrop.
Yeah.
What are the top 3 things that you think are important technical conversations right now?
So, like, Bitcoin, the project itself is extremely stable now. You could turn off Twitter, turn off the TV, go on a 2-year retreat, okay, and essentially nothing could change. It'd be fine. Your funds are fine. We're not, contrary to what Twitter or the media sort of like to sort of portray, right?
Yeah.
There is nothing critical happening in Bitcoin right now. Okay, like, everything is working as designed. It's just that we have a lot of demand, right? So that means Bitcoin is winning, right?
Yes.
Demand is a good thing.
Yes.
Through the years, right, since Bitcoin sort of started to become a little bit more mainstream, whenever we have a all-time high, right, or some new technical sort of change or a new project that came in and sort of used Bitcoin slightly differently, the fee cost for mining your transaction has spiked, right? Because there were more demand for those blocks. This is historically true, right? A great example of this, way, way, way back in the day, was Satoshi Dice. They were using the transactions as part of how they did their proof of fair dice and how their whole sort of system worked, right? So they clogged the system a little bit. And funny enough, they were filtered out. But
We're going to get to that. Yeah.
But what's important to understand is this: like, you can close your eyes, close your ears, go on a vacation, nothing's happening. Okay, like, everybody always has opinions, right? And there's a lot of inertia on the network towards not changing anything, right? We call that ossification in Bitcoin. And just so people understand, software is always updated. Okay, It's forever going to have to be updated because computers change and you have to update things. Bitcoin still has to change the Unix time concern, right? We still have quite a bit of time for that. But anyways, but my point is, there's people who, in good faith, want new features added to Bitcoin so that we can do more things, right? Or can optimize things. Some of these changes are a consensus based. That means they require soft forks or hard forks, right? And some of them are standardness. They call it standardness. And these are just changes that, they are just sort of like they're suggested changes. Let's put it this way, right? Because you don't have to do them in order to maintain consensus with the network, right? So, the size of the mempool, which kind of transaction you want to accept in your mempool, things like that, right? Like what kind of flags are the default, or for example, how Bitcoin Core client talks to other clients. Right now we have encrypted traffic. It's a huge new feature for privacy and security. It's great. But these things are not necessary, right? You can still run client version 0.13 and it will run. You might need to tweak for your computer, but just sort of setting these distinctions between, sort of what are the types of changes that Bitcoin has and does versus what people want and where the drama is, I think is important.
I love the highlight. So let's, and I think that is so important to kind of start with, because as we start talking about some of this stuff and you start getting way more myopic into it, you can be like, oh my God, everything's going to fall apart. So just rewind, listen to NVK say that first part. It's important. Okay. Let me just throw out a couple terms here, and then you tell me which one you want to start with.
Sure.
Covenants, CTV, op return, self-custody on layer 2 Lightning, scaling, data carry size.
Okay.
Which one of these
There's a lot in there.
Which one of these piques your interest?
Okay. So do we have between 10 to 20 hours to talk?
Which one do you think is important for people to understand or kind of talk about?
So covenants, ignore it. Okay. Like, unless you're a technical person who's interested in debating new features to Bitcoin that may or may not come, it's super cool. I like it. I want some of those features in Bitcoin. I wanted them to happen very slowly. Don't break anything. CTV is one of those. Check template verify is one of those. You may hear those words.
That's an enabler to covenants.
That's correct. It's one way of doing some kinds of covenants on Bitcoin. It'll be very helpful. It can alleviate some of the network traffic as well. It enables a myriad of things, right? And like anything that enables a myriad of things, you want to go very slow on your decisions on how to implement, if you implement, and how do you deploy it, right? So in my opinion, it's still going to take years. So you can remove from your risk assessment of Bitcoin.
Just because the devs are never going to come to an agreement for a soft fork on that anytime soon. They're just
not anytime soon.
Yeah.
And honestly, when it comes to things like that, the amount of people who actually understand the technical nuances of this, how this could do that, or how this is even activated, it's small. Okay. The majority of the people screaming about it on Twitter do not have a full comprehension of the concern.
Yeah. They just want to work on it and build it without really thinking about technical risk. Okay.
That's right. Okay. How about, you know what? Why don't you just throw the turn?
Well, okay.
And I'll try to address it.
Let's talk about the mempool blowing up. Okay. So, most of the chatter is this is all brick BRC20 token issuance through Taproot. So give people just a really and I have a full episode with Ryan Gentry from Lightning Labs talking about this Taro protocol that's rolled out that has enabled all of this. So if people want to listen to that much more detailed conversation, we'll have a link to that conversation in the show notes for you to get it. But from your point of view, is this something that is actually being used with the intent to create value, these assets? Are these people acting in a way that you think is financially interested that's value accretive to somebody? Or is this, some people in the space are calling it an attack? Where would you fit on that spectrum?
It doesn't matter what we think.
I like that answer.
It really doesn't.
Yeah.
This is Bitcoin. They don't need permission, right? They're paying fees. Therefore, their transaction gets validated, right? Like it really is that simple. People, personally, I think it's a scam. It's actually, if I remember, like the majority of that's actually coming from China. The demand for that token, right? They're trying to corner the market. But it doesn't matter, right? Like these are valid transactions. Just like the JPEGs, right, on chain, they use very similar mechanisms, and there is absolutely nothing we can do about it, right? Like there's people out there that want to filter transactions and try to get them to not come in, but realistically speaking, that's not possible, right? Like they can pay miners off the mempool to mine their transactions, and they'll pay a lot for that because it's asymmetric, right? So your transaction is trying to transact the value you have on that transaction. Their transaction is trying to mine a proof for, 1 million tokens. So it's going to be very hard for you to compete for that fee on their unit of byte, right?
Yeah.
They have a lot of victims to go after to sell their token to. Yeah. So, thankfully, because Bitcoin's economic principles were not designed for that, it's very likely that they will eventually run out of money, right? Because, our transactions are much smaller in size for the economic value that they're trying to transmit, right? So, the density helps you and I to make a real Bitcoin transaction as opposed to, a scam proof, right?
Is this when you're saying the density, you're talking about the weighted unit, which there's 4 million weighted units per block. Bitcoin transactions only data-wise use one weighted unit, and all of the data, I think you're nodding your head because you get into the op return debate, but then non-SegWit data that's in the block is weighted as 4 weighted units for each a quarter. Okay. So is that the correct conversation to have to kind of like make this make sense for people when you say something like the Bitcoin?
No. So let me, so it doesn't really matter because like most transactions are also taking advantage of the witness discount, right? So if you're using segregated witness for your transactions, which most people are, you don't have to understand that. Both are getting advantages of the discount, right? And there is a discount because this data can be pruned off your node. You don't have to store this data if you don't want to. That's why there is a discount. But no, what I meant is, say for example, your transaction size is 5 kilobytes, okay, or 10 kilobytes, okay, and your 10 kilobytes transaction is transporting $1 billion worth of Bitcoin. Okay, so a couple outputs, one for change, one for the destination, and one for the miners, right? The fee. Now that only takes 10 kilobytes, let's say, right? Now, when you're transacting your degen, like massive BRC20 sort of distribution of that token ownership, right? You might be transacting, say, like, 100, 200, 500 kilobytes, a megabyte, right? So we should really be comparing, both are taking advantages of the discount, right? So what we're really comparing here is it's $1 billion worth of Bitcoin in 10 kilobytes versus, maybe, I don't know, like $1 million worth of 500 kilobytes.
Yeah.
So economically speaking, you're a lot denser on that Bitcoin transaction, right? And that means you're gonna win in the long term, right?
Because of that network effect.
For that block space.
It's a network effect of market cap premium that people trust that you have to overcome. And like, it is so far down the track compared to anything that's trying to compete with it. Yeah, what a great point. Let's talk about Lightning for a second. So there's very technical people coming out and saying Lightning cannot scale. There's issues with being able to self-custody Lightning. What are your thoughts on all of this?
I have a complicated history with this one.
Let's hear it.
I am a bit of a Lightning disrespecter, but at the same time, I love Lightning. Like, you know, all things being equal, it kind of does work, right? I mean, I use it all the time. Unleash.chat uses for you to deposit. And the issue is, like, Lightning is still bound by Bitcoin dynamics a little bit too intertwined, right? And in the early days, there were about 50 papers for what's called payment channels. Payment channels is what Lightning is, right? And I was hoping back then that we would have, maybe 5 competing things that were not even maybe interconnected, because we can use Bitcoin as the interconnection, right? So the issue that I found is that, like, the current Lightning that we have tries to do too many things and appease too many different people and too many different standards, right? So we always fall into this issue where it takes too long to deploy new sort of Lightning features, and it's hard. Lightning is a very complicated technology. And when you have a lot of complexity, there's more issues. It takes longer to get to a very sort of efficient place. And Lightning really suffers on high fee environments because you have to open and close channels, right? So, but it does work. It is good technology. It's like anything that's trying to do like a big thing, it's not a simple answer. So no, it's not like the answer to everything, and yes, it's a good thing.
Yeah. While you were talking, I pulled out my phone. I've been doing this a lot on shows, just checking like how simple this is. Like, I typed in NVK on your Primal or on Noster, and just sent you 100 sats there while you were talking. This one's taking longer.
There it is.
Yeah, there you go.
Million is killing it.
Yeah, and so I guess whenever I'm looking at that, we looking at this from an engineering lens, right, are saying this is good, this is amazing. Like, to be able to do that without asking for an address or anything is somewhat absurd, like crazy. But we're saying that that's still not good enough because it wasn't done, because I'm not using a self-custodial wallet here. I'm using somebody else that's managing those keys for me to be able to do this in a seamless kind of way. I don't have to worry about channel management. I don't have to worry about, but I sent you 100 sats. You received 100 sats because the fee was so de minimis for these people that are managing this on our behalf. And I guess the question I got for you is that good enough? Or should engineers continue to kind of have the opinion that you have, that it's not good enough and that we do need to get to some type of, is it, I guess the question is this: from a technical standpoint, is there a way to make that turnkey and a person's managing their keys?
So there's a lot to unpack there. First, you have to think of, like, we don't use cash for $1 million transactions, right? Like, at least most people don't, right? You use a bank wire for that, right? You don't even use your credit card for that. Do you use a wire for a $1,000 transaction? Unlikely, right? You normally end up using your credit card. Do you use cash for $1,000 transaction? Most of the time, no, right? You use cash for, $5 transaction. Um, so if you start to divide, like different kinds of interactions into different ways of using money, it's still all US denominated, right? In this example. But, and it's still all being settled at the bank level for most of these transactions, right? So think of Bitcoin as like the final settlement, right? And then Lightning enables some of these uses in some use cases. Now, if you're sending just like a hundred sats, right? 100 sats is like what, like a thousandth of a dollar right now.
Yeah.
I can't, like, I'm probably getting the
Really
math
small.
wrong, but
Yeah.
it's very small. You can't even send dollars like that, but you can with Bitcoin using
Mhm.
Lightning, right? And those economic ratio dynamics there, right, of that being sub dollar by a lot, uh, um, make it very conducive to be able to do that very well in hub and spoke, right?
Mhm.
So you have a custodian, right, that's running that Lightning node, very nice large one with a lot of liquidity, a lot of channels going on there. He can achieve these kinds of like magical transactions because it's magic, right? Zaps on Nostr is just like poof, gone, and you don't need anything; it just happens, right? It's like a
Mhm.
like, very well. Now, if the receiver on the other end have a self-custodial wallet, right? He's not going to be as well connected, as well set up with liquidity of all sizes, and so it could not work as well, right? Um, Now, maybe for this kinds of transactions, like the hub and spoke or custodial model works great. But for example, I use Phoenix wallet on my phone for self-custodial Lightning, right? With some trade-offs on how they do some liquidity and things so that you can find liquidity better. It costs more in fees, but it works great when I go to Bitcoin Park and want to just buy, beer.
Mhm.
It works amazingly, never really fails, right?
Mhm.
So the trade-off there is fees.
Mhm.
Now trying to use Lightning for like larger payments. For example, we've tried to add Lightning to our web store, right? And most of the invoices when people go buy cold card are like between say $300 and $1,000, right? That's sort of like the average spread there, and it's a lot harder to do inbound liquidity self sovereign for that kind of invoice, right? Because we receive
Mhm.
only.
Mhm.
So, is Lightning great for that? I think it will be, but it's not quite there, right? Maybe
Mhm.
somebody else comes up with something else. Um, so I think it's important to put into perspective these things because when you hear people shouting on the internet about Lightning good, Lightning bad, there's no context, right?
Mhm.
Like, what are you actually trying to do? And I really think that Bitcoiners need to snap out of this, sort of monopoly of idea of solution for everything, right? It's like we need an ecosystem of a lot of things that do different things and solve different problems in different ways. That's the only way we scale 21 million supply to 8 billion people trying to buy, a coffee at the same time.
Mhm. Okay, so two things on that response. So with respect to the liquidity to do, call it $1,000 worth of buying power on Lightning, is this a function of how early we are? And if we warp ourselves 5, 10 years into the future, that you pretty much have liquidity in channels to be able to just easily do $1,000 transaction to anybody that's relying on some other service providing these channels. Is that something that you think kind of just
We can
uh
do that today. If I
yeah.
hit up Alex and we go to River, right, and we
Mhm.
have River handle our store liquidity,
Mhm.
he could do it like no
No
problem,
problem.
right?
Yeah.
The issue is, we're a Bitcoin company. We like owning our stock, right? Because to receive Bitcoin, we don't need anybody, right?
Mhm.
Unlike our credit card partners that we need them. I don't
Mhm.
want to have two things that I need other people.
Mhm.
Uh, you know, I want to need no one. And this is just how we run our business, right?
Mhm.
So, you know, I and to me right now, I would have to, can we do it? Yes, but I'd have to have a team dedicated to just receiving payments, right? To be able to accept in a self-sovereign way, $1,000 invoices, 1,000 times a day. Like, we're just not there yet.
It seems like there's a mantra that is very valid and very true for layer one, which is every single person, it has to be easy for them to be able to take self-custody and for them to receive any amount of Bitcoin without asking anybody's permission from anywhere in the world, right? And people are taking that mantra and saying that's how it has to be in layer two for Bitcoin to be successful. And I don't think that that's necessarily the case. I'm curious if you would agree with that.
That's a very good point. It's not the case. Like, each layer is going to have different kinds of trade-offs, right? So if you want uncensorable, like, and no permission Bitcoin payments, that's layer one. Okay, layer one, I don't even need to ask permission to send you money if I know your address. I can send you, $1 billion right now, and you're going to receive it, wanting or not. That is the brilliancy of the layer one. But the trade-offs are, it's like there's fees, and it's slower, and there's all the things that happen when you do these kinds of transactions. Now, Lightning is gonna have other trade-offs, right? So it's like, it's fast, but you need to manage liquidity, or you need to ask permission, or you have issues with statefulness, right? You have to be online. So now you have to have very secure systems that are holding Bitcoin for your liquidity online, right? It's not like your cold card that's cold, right? You have to put enough liquidity on the internet. So, you need professionals to be able to do that with a lot of money. But it's not lost. There's very cool things being built, right? There's the Breeze SDK. Phoenix is doing some of that stuff.
Talk to us about Breeze SDK.
So they're creating these packages that have a lot of that are doing a lot of the heavy lifting on channel management and helping with liquidity and integrating with liquidity providers that may be decentralized. It gets into like essentially a jargon soup fast. But the point is, people are working on this problem and it's getting a lot better. The fact that I can have a few $1,000s on Phoenix, self-custody on the phone, and make those payments, without any concern aside from a higher fee, it's pretty impressive.
The Zeus wallet is doing something similar, correct?
Yes.
Yeah.
Yes.
So for people that are trying to understand, and correct me if I'm explaining this wrong, NVK, but effectively you're running your own node on your phone, you're opening your own channels, layer 2 Lightning, Bitcoin, and you're able to have that sovereignty, but it's a little slower than running like what I did earlier through Primal's them custodying the Bitcoin. But you're the one kind of controlling. You can get into as much technical detail as you want, but it's much more turnkey if you're using one of those wallets for a person who doesn't have the technical competence. Yeah.
It's okay. Like, the majority of the people are not going to want to be self-sovereign anyways, right? So Bitcoin's mission is to replace central bank, in my opinion.
Yes.
Right. So we get out there, and we remove the central bankers, right? Like, so that's already a kind of a small win for humanity, right? Like, just tiny,
just small.
Even if we don't find a way of feeding chicken across the internet instantly with like cents, right? Have you seen? Remember the feeding chicken website?
No.
That was one of the first Lightning things. You could feed chickens using Lightning.
Oh, yes, I do remember seeing.
Right?
Yeah.
So even if we don't get to the chickens, we already win.
To people. This is hilarious. Explain this to people.
So there was this website. Maybe it still probably exists. I can't remember the URL, but like essentially one way they were showing how you prove that Lightning works was like you could go to this website and send like very small amounts of sats, across the globe to feed chickens. You would like enable a little machine that opens up and it drops some food for the chickens.
And you're watching the live video feed of
and you have a live video. It was pretty hilarious. But the point is, like, we can have a more complicated, more nuanced kinds of view, as Bitcoiners, right? Even though we're ooga booga sound money, um, it's like, yes, like we can replace the central bankers. It's already a massive win for humanity, right? And then Bitcoin does enable all these other uses that we can do, right? Like we can still buy the lattice with self-sovereign cash via Lightning. That works for that use case. Is already there. We don't like Lightning as is already works for that. Self-sovereign.
Why do you think that this is lost on so many devs or just people operating in the space? Would you say that at the core, they don't really fully understand what this value prop really is, which your description was it replaces central banks? I would just add a little bit on top of that, which is it's a true peg. Gold is a perception of a peg that continues to fail over and over again throughout human history. This is actually a peg that provides the technical solution that can peg fiat and global central banks. That's what in my opinion, that's what Bitcoin is solving for. Everything else is just gravy on top of that is with respect to payments. Like, and I think this is a highly controversial statement. I'm curious if you would agree with this. If Bitcoin pegs fiat currency and everything layer 2 and payment related fails, I think we still have a massive change in the incentive structures of humanity if we just are able to peg fiat currency with layer 1.
So my view on this is kind of simple. I say that everything in Bitcoin serves at the pleasure of store of value.
Yes.
That it really is that simple, right? Like it's like store of value is king. Everything else is there for a store of value. Do you get a lot of other features? Absolutely. I mean, like it's endless, and we haven't even scratched the surface of all the stuff we can do. But why do you have censorship resistance transactions? It's because you need that for a store of value, right? Because if you say no to that, is no longer sellable. Therefore, is no longer a good store of value, right? You need to be sellable for that. Is it divisible, right? You need divisibility to be a good store of value, right? And all this things working sort of like from this principle. If you start from this principle, like we're on the same page, right? The problem is like some people start from the latte conversation principle.
Yes.
Right. And if you start from that premise, I mean, like we're not gonna find a path where we meet. Like it's a whole different thing, right? Now we're trying to use the store of value as means of exchange for daily stuff, right? Bitcoin can only offer so much, right? Like, so like there will come trade-offs, and the way we handle those trade-offs, right, is by adding these other layers, right? And there is more coming, right? I mean, there is the eCash stuff that's very old. I mean, eCash, Chaumian Cash.
I want to get into that, but keep going with your point, and then we'll go there.
Yeah. So, I mean, my point is done. Really, it really is this idea that you have this store of value. This is Bitcoin's promise that you don't get debased, and it comes with all these other benefits to support that case, like the censorship, the ownership, and the self validation, right? I mean, this is not something you can do with gold. You can't self validate the gold. You can't check the tungsten inside the gold bar with like home tools unless you drill the bar. But then are you drilling everywhere? What about dissolved parts? It's all silly, right? When you compare to Bitcoin. And because Bitcoin is so...
Even with all those things, you still got to trust the people that are performing this audit on whose ever behalf is telling the truth after they give you the results.
And on top of all that, because Bitcoin is so salable and so fungible, you can send it over the internet to somebody on the other side of the speed of light, and it's redeemable and verifiable by the receiving party, right? That's why Bitcoin, because of this feature that Bitcoin has to support the store of value, you get for free the medium of exchange.
All right. So when we talk about running your own node and channel management and self custody on layer two, one of the solutions that are being proposed is Fedi, eCash, this idea that, let's say, you have a group of family members and you want to help them, you would self custody on their behalf, and then they're able to participate in this sediment, and they are able to spend just as quickly or pretty close to as good as somebody else that's managing all of these channels because you're pooling all of these resources together. Um, so you're making it more turnkey, and you're putting the trust in somebody that you actually know as opposed to some third party that you don't know from Adam. Um, Talk to us about your opinions around all of this. Is this a real solution moving forward? One of the most common questions I get asked from family and friends is, Preston, where do you personally buy your Bitcoin from? And the answer is really simple. I buy it on river.com. Not only can you easily buy Bitcoin with zero fees on recurring orders, you can have peace of mind knowing Bitcoin on River is held one-to-one in multi-sig cold storage, all while being fully licensed and regulated in the United States. Plus, their relationship managers are US-based and available by phone for you or your business. Additionally, River has built their own infrastructure from the ground up, which means they don't rely on third parties to function like other Bitcoin exchanges. River also just created a new feature not found anywhere else called River Link. It allows you to send Bitcoin over a text message to easily orange pill your family, pay a friend for dinner, or send a gift. There's a new standard for investing in Bitcoin, and River is setting it. Go to river.com/fundamentals and get up to $100 free when you sign up and buy Bitcoin. That's river.com/fundamentals.
You know, I made a tweet that was a little controversial a little while back, which is there is not enough Satoshis for everybody in the planet. Okay. And, you know, if you divide, I don't know how many, there's like a quadrillion Satoshis.
Just clickbait,
sure.
man. You just putting out the clickbait.
But here's the thing.
Let's hear
wealth is never evenly distributed, right?
Yeah.
50% of the world's wealth is owned by, 0.001% kind of thing of the population, right? Realistically speaking, even if we make Bitcoin 10x better distribution, which is already an amazing sort of like thing for the world, let's make it 100 times better distribution of wealth in the world, right?
Mm-hmm.
So you still don't have enough Satoshis for everybody in the planet, because this now, from a basis point to 1% of the population is going to have, say, 90, 80% of all the money, right? There is not enough sats now for everybody in the planet. And one of the cool things of covenants as a quick tangent is that you can have co-ownership of a Satoshi, but I'm not going to go there. What's cool is that, like, so how do we make it so that there is enough funds available, right, for 4 billion people in the world who are not the owners of 80% of the wealth, right? Like, these people need to share enough Satoshis to have enough velocity for transactions and also for their savings to be stored. Okay. So how do we do it? We can't, right? Mathematically, we don't have enough sats in Bitcoin for them. So what I love about eCash is that, we can offer them, and that's true also for partially liquid. You can offer them these other tokens that are Bitcoin redeemable, right? They're Bitcoin pegged as well. And they're essentially like smaller units of a claim on Bitcoin, right? And because of the way the cryptography work, you can offer better promises than a bank does. So in a way, it's kind of like a mix between free banking and sort of like crypto anarchism, right? But these are just fancy words to say, hey, listen, you know what? I can make you a promise, a cryptographic promise, that I'm not diluting the supply of this token that has a claim on Sats, right, on Bitcoin. I can make a claim that I don't have full control over the mint and over the transaction, the transaction verification. right? And with that, I mean, and that with that comes amazing privacy, right? Because you don't know who owns each token, and the whole eCash, Charmin Cash amazingness. Um, so and it's also stateless, so you can go and do this offline. So I can have a bunch of people in a village, the quintessential example of the startup I'm going to save the world kind of like thing, where there is a village of poor people somewhere the global south, and realistically they can't have Bitcoin satoshis in any reasonable distribution. So right now, at least they can have a much better thing that they had before. They're not being debased by a note created by an African central bank that is printed by the French government anymore, right? They have a cryptographic proof of something that is a million times better, and they cannot be rugged because it is backed by Bitcoin.
So a person who's hearing your statement there, they're going to say, well, in what is it, 210 quadrillion satoshis that represent the 21 million Bitcoin. So 210 quadrillion units. How is there not enough for the 7 billion people on the planet? I don't understand.
So that's possible units, right? When you have your whole Bitcoin in a single UTXO,
Yeah.
you already took, 100 millionth of the supply off the table.
Yeah.
Right? 18 million Bitcoin, almost 19 million Bitcoin, almost there, is already owned by somebody. And maybe there's 20 million people in the world that own Bitcoin.
Yeah, but one of the things that I don't think that you're accounting for it for people like me, after the world starts moving to this Bitcoin standard and equity and everything else starts getting repriced in Bitcoin, people that are sitting on billions of satoshis, they're going to be more than happy to get rid of those in exchange for cash.
Are they?
Or I think so.
I don't know. Manhattan's still owned by very few people.
You know what? Whenever you start looking at equity that's cash accretive, like, hey, if you're denominating your business, right, looking at your business that you have NVK, and it's priced at 2 times earnings, annual earnings, yeah, I think I might actually, and I think that there's a competitive moat. Yeah, I will give up Bitcoin to own that business. And if that person is a person of the legacy world that's been denominating everything in fiat, I think they're going to want that Bitcoin, and they might have to
Preston,
sell it at 2 times earnings to get it.
I don't disagree with you. But the math is much crazier when you're talking about a 21 million supply, right?
I think
the 200 quadrillion sats.
I think the legacy fiat person gets more desperate to own it, collapsing the price premium of 35x PEs to these numbers so that they can get their hands on it, which resets and spreads satoshis all over the planet, right? Like I think so many are missing that part of the quote unquote, I'm using the WEF term, the Great Reset. Like they're missing that part of the reset.
Yeah, I don't see how, because there's also the cost of making those transactions, right? Maybe those are claims, because let's just put it with today's state of the network. 100 sats is the dust limit. So, already divide your quadrillion by 100, right?
Mm-hmm.
And then there is the cost of making those millisat, those, let's just call them sats, the actual sat. So there is a cost to transacting those sats that will be larger than the sat itself, right? So you still need to put out a fee. So you cannot transact a single sat unless it's a donation to a miner. So you're going to need 2 sats. So divide that number by 2. Okay, so there's balloons going around. So you divide it by 2 because you still need to pay 1 sat. So now you're paying 50% fee. Because remember, Bitcoin fees are Bitcoin denominated. They're not dollar denominated. So, even let's say, even if it's like 10 sats, you still have to give up 10% if it was 1 sat fee, which is not going to be, right? And then you're competing now with Michael Saylor doing a UTXO consolidation, right, on that block for $100 billion worth, and it's just,
But
this
here's why I
math
think this
starts
is
to like get crazy.
so I think people hearing this might be hearing this and saying, well, this is a concern, this is an issue. But I don't think that it is, because you can add more units to the right of the decimal point, and Bitcoin's just as scarce as it was before. You're just adding more additional monetary units. Well, you're not adding more units, you're adding more placeholders to the right, which still has 21 million Bitcoin.
So I in Bitcoin, I can't remember now that there is a limit on like how the integer system works on Bitcoin, and like, there is a limit to how much divisibility we can have in this current design of the system.
Because
but here's the cool thing.
Because of the
it's actually like computer math as opposed to human math. Human math, you can do whatever you want. That's why the economy is the that it is, right?
Yeah.
Like, they can keep on printing and dividing and doing whatever. But here's the cool thing, though. For example, with Lightning, you get another 100 million division.
Yeah.
Because Lightning is a claim.
Mm-hmm. So
right?
there are enough units.
Yeah. So there are, as long as they are not fully yours. Let's put it this way.
Oh,
as long as they, because they're still in suspense. They are non-vested in Bitcoin. They're non-claimed in Bitcoin. Once you claim that in Bitcoin, you have to exist in the Bitcoin's physical universe. The Bitcoin physical universe is, the 200 quadrillion Satoshis, right?
Mm-hmm.
Outside of that, you can do many things, right? So Lightning offers an extra 100 million divisibility, right? And if you're using custodial Lightning or even self-sovereign Lightning, if it's designed right, you can have those units, transact those units, but you're not getting the same promise that is Bitcoin's promise.
So if this person falls asleep for 2 years and they wake up, is this what they're looking at?
The Lightning wallet could be gone. But it's okay, right? Like, I mean, like, this is where, like, it drives me insane with Bitcoiners conversing about this, is that, like, we're still making the world 1,000,000 times better.
Yeah.
Like, not 10 times better, not 100 times better, 1,000,000 times better, right? Yeah. And we're going to come up with more solutions as we go along. Like, I mean, look how much Bitcoin came already. Like, there was not even multi-sig when we started.
Mm-hmm. Mm-hmm.
Right? So, there's a lot of clever people with the correct incentives trying to fix these problems, right? And we are. I mean, like, the eCash based on Bitcoin is a proof of that, right?
Mm-hmm.
And it's not Lightning. It could use Lightning, but it's a different solution, right? There is the liquid solution, and there's going to be more. It's all a matter of time, and things tend to come not when we want them, but when we really need them, and it's already late, a little late and over demanded.
I know that earlier we said that the CTV and covenants was something that is much more of a technical conversation, not something that's probably going to happen anytime soon. But I think it's something that people are continuing to hear about. So I just want to kind of cover it with you as to what this brings. And just your general thoughts on how much complexity or risk that it introduces.
So it's funny enough, it's surprisingly simple. It's a very simple change. It's an extra opcode. And all it does is it checks the template verification, right? So essentially what you can do now is your Bitcoin so let me put it this way. Let's see if I can explain this simply, but get the point across. So in Bitcoin right now, the way the script works is on the input. Okay. So that's why your multi-sig, right? Your money is going into your multi-sig. And then when you want to sign it out, you have to use the keys to sign it out. Mm-hmm. Right? With the template verification, right? It could be in the output. So that means when the money's signing out, it has rules. And those rules, we already have two things that kind of have rules like that. It's not quite, but just for sake of being practical in explanation, the time locks, right? So the money is not spendable by the network until it hits the time lock. We already have that. Mm-hmm. With CTV, it's the same, but you get to write a script or like a template for that money span. So the UTXO can say, for example, you know, don't you're not allowed to spend unless you hit this time and you hit like this amount of signatures and it does this and it can only go to this address.
Mm-hmm.
It's covenants, right? Like it's the
Mm-hmm.
same as a deed on a house, or very similar to all or covenants on a trust, right? All you're saying is that when the money's spent, here are the rules set,
Mm-hmm.
right? Uh, some of the fear mongering is because, people are like, it's scary to send money that's going to have rules. What if it's broken? Well, I mean, if it's broken, you just didn't write it right. That is true already of multisig. If you don't do a correct multisig script, money gone, right?
Thanks for the donation.
Thanks for the donation, right? So essentially what Covenants does is, like, at least the CTV does, is this is how it works, right? There's a few other proposals that are not quite as mature. Covenants came out quite a while. That Jeremy Rubin. It really is like a super clever way of doing this. It's been studied to death, in my opinion. It's fairly safe. But you have to get the whole network to come along, so it's going to take time.
Have there been other? I know for a long time, some of the stuff that was ultimately being implemented on Bitcoin was done on Litecoin or one of these other blockchains. Has CTV been done on another blockchain to date?
Not that I know of. Maybe it's not impossible, but I think it was a different time. So I was having this conversation with people about activation, right? Like the side that's like won it yesterday and the side that doesn't win it ever. I did an episode of Bitcoin that review about that, and you know, you can't you can't expect people to sort of move their money, their bags, their life savings into something that is new right away, right? So you really need um, you need to get people to understand. And CTV is a feature; it's not critical, right? When we did the UASF for SegWit, right, way back, you was a
2017.
critical thing, right? I mean, Bitcoin was splitting and people were going to kill each other, right? So
Yeah.
it was a different time, and so we had to deal with that, right? It was not optional. We had to go somewhere, and the compromise was actually snuck in there, right? The block size got doubled,
Jeff Garzik.
right? Yeah, and then I'm not even going to go there. Uh, but there were people that wanted to quadruple, and then there were people that wanted to
Yeah.
make it unlimited,
Yeah.
right? And those projects that are essentially dead, right? Like it was proven the obvious that it was idiotic, right? So we did do a compromise on Bitcoin, and we created the clever way. I did a whole episode on SegWit and explaining it, truly technically speaking, about it. And we got the discount because it's prunable. Very clever cryptography, like extremely clever cryptography. Uh, anyways, so but now we're at a point where like the system works. It is great, right? So, do we activate stuff now? No, because it's going to sort of fracture the consensus and the social layer of Bitcoin, right? So take your time, get the people on board, and who knows? Maybe the fee environment remains so awful that people start looking at CTV as a way to just improve that, right? Because you can do this shared custody of Sats.
I think that's generated a lot of the conversation is the fee
Yeah.
backdrop. Yeah. Yeah.
I mean, listen, it's sales. You got to find an angle, right? Like to, an honest angle, because it's going to get scrutinized, and maybe that's how you get it through.
Is the fee environment that we've seen since September, October been conducive to building in layer 2 from your point of view?
Oh, absolutely. The problem is Lightning really suffers on high fee environments. So, it's good because you get to transact. If you already have the channels, you get to just transact between them. It's great. But also, like, I feel like low fee environments, they make people lazy, and people come up with lazy solutions that don't scale. So it's nice to have this to put a fire under people, so they actually go out there and build efficient, good solutions, and they're going to come out. I mean, people find a way, right? Because there is demand.
You're tinkering with AI right now.
Yes.
what's your broad, you're sculpting something here. What are the big chunks that you're knocking off to help people understand your perspective on AI?
So I think like, the way I approach sort of things I want to understand is by building a project and hopefully a company out of them, right? Like,
Yeah.
uh, and that's how the whole Unleash.chat started. Um,
Is that the
I
address
was
people can go to if they want to check it out?
yes,
Unleashed
Unleashed.
dot chat.
Yeah.
Okay.
Um, and I was, all these things were sort of like magic, right? I was paying attention to Bitcoin, building on Bitcoin only, and this thing sort of took me off left field, right? Like, whoa, how come we're like so ahead on this thing, right? And then I started digging and sort of trying to run my own and sort of like figuring out this stuff. And
When you say running your own, you're running your own transformer, like your own GPT. Is that what you're
yeah,
saying? Yeah.
running your own like LLMs locally and sort of trying to play with it, train it, or whatever.
Mm-hmm.
And it's amazing how it was not like as good as the sort of like the open AI kind of thing, right? Because
Mm-hmm.
and I couldn't like understand why, right? I mean, like, this is a good model. This is their last model. If I go on their both last models, why doesn't it like work the same way, right? And then I started dug in, and it's like it became clear that like there is a lot of mechanical turking that go behind AI solutions, like AI as a service, right? And it's all packages just like magic, right? That you
Mm.
just type the thing, it just magically knows everything, right? Um, and so I started like, I got like some of my resources like to go and sort of build on this, and you know, we started sort of like putting together like how can we get closer to like the answers there, and essentially like you have to build a lot of custom code that helps the AI do the things that you want it to do, right? Like essentially like you're building AI tools for the AI to go and do the things, or
Mm.
tools for the AI to go and think about the things, right? Um, these are machines, right? Like, all that they do is predict the next word. It's just that
Mm-hmm.
they're so good at that that it feels like intelligence, right?
Mm-hmm.
Um, but anyways, so um, I think we've we've starting to hit some walls, like the large players are starting to hit some walls, and that's why they're so desperate to hire new people and things, because this way of doing it, there's a lot of improvements that can be done on the mechanical Turk side, but we need still a few more breakthroughs on the intelligence side. Um, and but the thing is, like, they already are amazing. I mean, like the things you
Mm-hmm.
can do, in like you could already probably replace half of a future 500 company analyst desk. Like,
Mm-hmm.
you get like half the staff like gone right
Mm-hmm.
today. Like it's totally possible. It's just that the glue is not quite there yet,
Mm-hmm.
right? So you don't have a way for, the CEO wakes up in the morning, he's like, I want to know, these very complicated questions about my business, right?
Mm-hmm.
So can you give me a report on how many cold cards of blue collar I sold on the last third day of every June, the last 3 years? And, but please correlate that with the moon phase. Seriously, like,
Yeah.
you know, maybe there is a good correlation there. Maybe you shouldn't have like blue cold cards outside of that moon phase, right? Like you could
Mm-hmm.
improve your sales, and be more efficient on how you do inventory. Um, and but the tools are not quite there yet on those sort of like how the person asks those questions, right? And how you input all the data. And then there's the concern about privacy on the data. So we're building some of that stuff ourselves because we want it for ourselves. We made it available to people. And I wanted to search Noster, right? With the same way you do Grok on Twitter. So long story short, these things are like super advanced. Uh, they, in terms of being able to help you be productive, but they're not quite there yet to make you feel like you're a superhero.
Mm-hmm.
That's it's a great example of this is when you go try to generate images, you can never get the image just right, and it starts to mess up as you ask. So I was trying to make a meme, right? Like, make me 3 green capybaras and 1 red capybara, so I could do that meme, right?
Yeah. Yeah.
But I went 4 in a row, you know, 3 that are green and then 1 that's red, right?
Yeah.
And it'll always either add an extra capybara or you would like, make them the wrong color or so. But and if you go there and say, hey, make me a great image of Bitcoin's flight to safety, make me a beautiful woman on a private jet, looking out the clouds in the sunset, right? It made me a beautiful image. But I cannot make it repeat it, and I cannot make it like do it exactly as I wanted if I start adding little parameters. Right?
Yeah.
So that's where we are now.
But you think within years, this trajectory of this is getting crazy, correct?
It's an arms race kind of environment right now, right? So there is so many resources, so many smart people working on this that, it could be years, but it could also be tomorrow that we have like crazy breakthroughs, right? So that's why it's so important that like, if you run a business, right, or if you have investments or whatever, like, you have some strategy around like how you take advantage of some of this stuff, and you're like plugged into what's happening. It's kind of like Bitcoin in a way, like, it's a multiplier of your capacity, right? Bitcoin is a multiplier because you're being debased, so it's essentially an inverse multiplier. You're being inversely debased, right? And you're getting self sovereignty, and if you start early, you start accruing that advantage. With AI as a business is the same, right? Like you have to start building that know how, and start building tools that are good for you, that help you get the multiplication on your capacity, right? And ultimately, I mean, like that's almost like Booth's sort of like
it is
mantra, right?
Yeah.
But again, it's one of those things like you have to be there. You have to be in the field, playing with it, or you're gonna probably miss out, and you're gonna be out competed, and you're not gonna understand why. Maybe it's just that your competitors can just do better inventory, but like 10x better inventory, so they find more margins and they find more efficiencies, right? And your product gets better, and you don't understand why. So that's sort of like an interesting way to look at this.
It's hard to believe we've been talking for an hour already. I could just chat with you all day. I just want to highlight to people listening to this that maybe are not familiar with NVK. I can tell you, if you talk to anybody that's been in this space for a long time, and you ask them what hardware wallet they would recommend, the one that they're going to say, and we have no relationship advertising wise or anything. I'm just telling you what they're going to tell you is it's Cold Card, and it's NVK's product that he's made, like best on the market. You guys got to check it out if you have never looked at it before. We'll have a link to it in the show notes. I do have an ad with River, but I personally use River and I love them. So if you're buying your Bitcoin and you want to take self custody, there's the combo. But NVK, I can't thank you enough for making time, not just for today's show, but when I do text you and ask you questions that are for me difficult.
I love it.
From a tech standpoint, you're always so kind to help out, and just really kind of just thankful for you and your education for not just myself, but everybody in the space. You are a force to be reckoned with when it comes to tech. So thanks for making time and coming on the show. Any other highlights that you want to point people towards?
I mean, no, listen, thank you so much for the kind words. Regardless of like which hardware wallet you choose, use a hardware wallet, like get your funds off the exchange, like River is it really is a great company. Buy your Bitcoin, get it out, take self-custody. It's kind of the whole point of Bitcoin. And try to review your security practices. Having the Bitcoin, the most important thing after getting a Bitcoin is keeping it.
Yeah.
So,
yes.
Everybody wants your Bitcoin. The bad guys, the tax man, the people coming. There's a tsunami coming. So please, like, take this seriously. Take the responsibility and jump 2 feet into self custody. Hopefully you like my product, and but get out and do it. The time is ticking.
Yeah.
You're only going to get less Bitcoin from now on. That's
That's true.
It's brutal. It's brutal. Like our store receives Bitcoin, right? And through the years, for every invoice, we only get less Bitcoin. The dollar value of those invoices keeps on increasing, but like it's insane to watch that trend.
No amount of productivity can keep up with it, right?
That's right.
All right. Well, hey, this was a blast, and we'll have links to all that in the show notes. NVK, thank you so much for coming on today.
Thank you.
In my experience with friends of mine, I obviously try to orange pill them, and some of them get it, some of them they don't want to know about it. But as soon as I told them that I get paid to shower now, because literally every time we take a shower, my wife asks me, like, how many sats did I make now with the showers? I can see, like, people that don't really like Bitcoin, now suddenly they're like, okay, wait, so this produces money? And can I have this in my house as well?